Okay, and welcome everybody. My name is Kathy Burrell, and I am an entrepreneur in residence here at WeBC. I'm a former fashion designer. I'm a former wholesale clothing manufacturer, and I'm also a former retailer for 18 years. I'm currently a consultant, and I'm currently an author, and I work on contract at WeBC. So all of you that are in business, I've done what you've done, set up my businesses, paid my taxes, organized everything so that it's easy for me to run it. Before I go any further, I'd like to just acknowledge today that we are gathered here in Kelowna on the traditional and unceded territory of the Okanagan Syilx people, and we recognize, honor, and respect the presence of Indigenous people past, present, and future. If you're curious to find out where you're actually joining us from, what territory, Netta has posted a link into the chat, and you can go ahead and check that out. Or if you'd like to actually tell us where you're from via which territory you're on, please feel free. I also want to let everybody know that we do these topics at WeBC because we serve women in business. We only have one mandate at BC to help women to start a business, grow a business, or purchase a viable business here in BC. And we really want to know from you what you're needing. At the end, we're going to be doing a feedback poll. And in the feedback poll, in about an hour's time, if you have a suggestion for a webinar that you would really like, a topic that you really would like to delve into, we'd love to see it. So please put that in the feedback poll at the end. Yeah, okay. And what we offer at WeBC. I mean, this is pretty basic, but it's really good information. We offer business loans to women starting at $5,000 and going right up to $150,000 to start, grow, or buy a business. You're going to need to have a business plan, and you're going to have a cash flow to show us in order to apply for a loan. So some of the information that you're going to get today is going to help you with that. We provide business advice. We have business advisors that serve the entire province of BC. Our business advisors are generalists, which means that they know a little bit about a lot of different kinds of businesses. So if you have specific questions about your business, I can offer you a complimentary 1-hour business advising appointment. And for an hour, you can ask a business advisor questions, find out everything you need to know. We offer skills development workshops just like this several times a month. The best way to find out what we're offering at WeBC is to sign up for our e-blast newsletter. We send you one email every month, and in that email, you get a list of webinars that you can essentially click on and register for. And again, Netta is going to put that in the chat. So please sign up for our e-blast newsletter. If you're a woman in business, I mean, it's nice to have a network. We also offer mentoring to women that have been in business between 2 years and 5 years. And specifically, we don't offer mentoring for brand new women in business because there's a lot of things that need to be done. And we have just found that 2 to 5 year period is where, you get the most out of mentoring. However, if you were to get a loan with WeBC, we offer free mentoring and free business advising to every woman that gets a loan with us. So that's pretty impressive. Lastly, we have a supportive community, and that's just everybody that knows what WeBC does. And again, I came from a family business. My father and my brothers were in business, so I had someone to talk to about business. A lot of women don't. And so having a supportive community of other women entrepreneurs is really invaluable. Okay. So welcome today to our webinar and to our panelists. Today, we're going to be talking about avoiding common business mistakes. And believe me, at the beginning during startup, you really want to minimize that situation. You want it to be as smooth as possible. We're very pleased today to have Chad Chang and Matthew Wong, and they're the founders of Purpose CPA. We're really excited to have them today. And these two gentlemen are going to shed light on what should go to the top of your business to-do list to help you gain a better understanding of how important it is to start your business the right way. And I was telling them, these gentlemen before, it's one of the questions I get often in client service is, how do I start? How do I set up my books? Now, I'd like to thank Chad and Matt for joining us for this session. And I'd also like to thank our session sponsor today, which is CPA BC and CPA Canada. So I think without further ado, let's get to the meat. Chad, Matthew, please take it away.
Thank you very much there, Kathy. I will share my screen here, and here we go. And there, we're ready. Great. Can everybody see that?
I can.
Great. Chad, are you doing full screen, or are you, because we can see your notes as well?
Yes, I'm going to switch it to full screen. Here we go. All right. Well, thank you so much. There we go. Great. Can everybody see that?
Perfect.
Yeah, we're all on mute.
Great. Okay. Thank you so much for that introduction, Kathy. It is an honor to be here with WeBC and all you participants today. We are from Purpose CPA, and we're impact-driven organization. Part of our mission is to not just do books and provide advisory, but also be out in our community. We connect with other communities and other organizations in our community that we feel we want to provide impact to. We connect with Indigenous organizations, minority groups, organizations, and do what we can to help them success and be successful and thrive in their businesses. So thank you again. Good morning, and everybody. My name is Chad, and I'm a CPA. It's a pleasure to be here today to talk to you about understanding the value of a business plan and business structure and how to monitor cash flow. We have about an hour here today, and you're free to have any questions. We do like that dialogue as we go through the 5 common mistakes. So raise up your hand, and we'll do our best to answer the questions. We may not get around to it, so do drop your questions into the chat box, because we will have a question and answer session near the end of the presentation. This presentation, as you know, has been presented by Chartered Professional Accountants of Canada. CPA stands for Chartered Professional Accountant, and accountants work with numbers to help keep businesses honest and successful. CPA Canada is one of the largest accounting organizations in the world, representing more than 217,000 CPAs across Canada. And Canadian CPAs are recognized and respected across the globe for their knowledge and integrity. Some CPAs work in accounting firms, while others work in industries such as entertainment, sports, technology, nonprofit, and many more. Depending on their specific job, CPAs can be responsible for making sure a business's financials add up, managing budgets, developing plans and policies that help grow the business. So a little bit about myself. I'm one of the co-founders. I focus primarily on commercial residential real estate and small and medium owner-managed accounting with tax and advisory. I'm a co-chair with CPA BC for the Construction Forum. It was when I started my accounting career, I had joined a small business there in HVAC mechanical. Coming from my past life in larger organizations, I had not seen accounting in small businesses. And when I had got there, it was very unfortunate. The past bookkeeper who had been with the organization for about 15 years, she had passed away. But when I got there, it was just picking up all the things that went along with small businesses, and seeing that it was for small businesses is very tough. The skills and all the requirements that small businesses may not get around to an understanding for accounting, it was just not there. So I saw a need to create the Construction Forum. It's been going on for the past 6 years, going on to 7 years. If there are other CPAs practicing in and around construction, do check out CPA BC. We'd love to have you there. I also do want to acknowledge that as our firm, we acknowledge that we're located on the unceded territory of the Coast Salish people, and it is an honor to present this this feature, this webinar to you on this land. And next, I'll pass it over to Matt for him to give an introduction, and he will take it away from there.
Hi, good morning, everyone. Welcome to the presentation. My name is Matt Wong. I'm also one of the co-founders of Purpose CPA. I am a practicing CPA with about 15 years experience. Most of my experience is in apparel and food manufacturing and in retail. I've been helping a lot of small to medium-sized private, typically private businesses with their accounting and advisory needs. For us, yeah, we founded Purpose CPA as a impact-based firm. We are a living wage employer, and we are a hopefully aspiring B Corp one day. Great. So for the agenda today, we will talk about the 5 common mistakes that startups can make. We'll go over the types of business structures. Number 2, having a good business plan. Number 3, cash flow and financing. And then I'll hand it off to Chad to talk about staffing and taxes. And then we'll also hopefully have a bit of time for a Q&A. There's a lot of information to go through. So if hopefully we can get around to some questions and answers. And if we don't, we'll have our email and contact information. And we're certainly happy to answer any questions afterwards as well. So the introduction on the startups are defined as, so most businesses, a startup is defined as any business that's been in operations for under 3 years. Seems intuitive, but over half the startups are run part-time, whatever you want to call them, side hustles, right? And the average entrepreneur only has a seed money of under $5,000. Next slide. And I think more relevant, and even in BC, almost 32% of startups are technology based. And in our firm, we do a lot of technology transformation. I might add to that, even though you may not be technology based, you may not be selling a technology product or service, increasingly more and more businesses are technology or digitally enabled. Right, so almost all your business processes, how you make things, how you sell things, are done through technology. So I would almost argue almost 100% of businesses, new startups, are technology based and technology driven. Most businesses in BC and Canada are actually small businesses. So a solo run business with no employees actually accounts for almost over half of the total businesses in Canada. So it's definitely a driving force of the Canadian economy here. So the first mistake is considering the types of business structures. So we like to call ourselves as self-employed. Entrepreneur, it's a very loose term. You could be any one of these three structures. You could be a sole proprietorship, you could be a partnership, you could be a corporation. Now, it's very helpful to define what type of business you are in rather than using the term self-employed, because there are different tax and legal implications. Now, there are also two other structures. I'll briefly mention it, but I won't go over it. There's also joint ventures, which is similar to partnership, but has key differences. And there's also a trust. So for sole proprietorships, next slide, please. It is the simplest way to start a business. You can start as simple as just using your own name and having your own existing personal bank account. It's the least costly alternative because, one, you don't need a lawyer to file any documents. You don't have to have a separate bank account if you operate it under your own personal name, right? So you don't have to incur double the bank charges, right? All your net income from your sole proprietorship gets reported on your personal tax return. You typically have a year end of December 31st, although you can have a different month as your year end, but it does increase your complexity of tax reporting. So generally, most sole proprietorships are on a December 31st year end. Another advantage of a sole proprietorship, especially when you're starting up, is that there may be tax advantages for those losses, because any of those losses that you have from your sole proprietor business can be claimed against your other sources of income. So if you still have a full-time job elsewhere, you may be able to lower your income tax bill. There is an element of risk to it because as a sole proprietorship, you are mixing your business with your personal assets. So if your business is sued, you may also lose your personal assets, where I'll mention in a bit, a corporation does have a bit of separation. Although you are a sole proprietorship, you are required to register your business with both potentially the provincial and the federal bodies. Keep in mind, if you operate your sole proprietorship with a name other than your full name, it'll be referred to as doing business as, or DBA. So, for example, Jane Smith can operate a website building business. It would be referred to as Jane Smith doing business as Fantastic Web Design. And there are minor registration costs in order to register your businesses. And again, keep in mind on my earlier example about Jane Smith doing business as, if that is the case, you will have to have a separate bank account, because that's where your vendor or where your customers would pay you, right, to your new name. There is a difference, even though you did the registration, there is a difference on the federal business number. Keep in mind, you do have to register a separate business number for your corporate taxes, your payroll taxes, and whatnot. So for a partnership is defined as a relationship that exists between two persons, and it may be two individuals, it may be corporations that carry on business with a common view of profit. You can form it verbally or with a written contract. It is strongly recommended to have a written partnership agreement, because that will outline how things such as profits and losses are shared. It can outline roles and responsibilities. And I would also argue it is quite critical to consider an exit clause. And kind of, if one partner says, I'm over it, I want to go and do something else, what is that mechanism in order for the business to kind of buy out one partner and move on, right? Because those are typically the costliest parts of any sort of disagreement between partners. Partnerships, similar to sole proprietors, all the income and losses are flowed out to the partners, and you report your income or losses on your respective tax returns. There's not a separate tax return as required to be filed for a partnership. Now, for a partnership, larger partnerships, With more assets, there's additional reporting requirements, but generally, yes, that's more applicable if you're long past the startup phase. So for a corporation is a separate and distinct legal existence from its shareholders. So you typically have to add the words, you'll see it limited, corporation, incorporated, or any of the short forms. It is more costly to set up and administer. You can incorporate federally or provincially. And generally, if you plan to operate throughout Canada, right, if your startups plan to grow to, have a high growth and operate throughout the country, generally you can incorporate federally. There are, in terms of costs, it probably costs about a lawyer about $1,000 or more to do the incorporation for you. If you will be required to do a name search, and that just makes sure and checks that name is not already in use. And as part of the incorporation, you will be required to also have your articles of incorporation, bylaws, shareholder registers, and an initial shareholder agreement may be required. So again, similar to a partnership, it is highly recommended to have a shareholder agreement, especially between non-related ones, which will address sort of expectations, conflicts, and kind of like if you need to exit, what happens. The other costs, certainly from our end, is the administration cost of your bookkeeping and accounting, right? Keeping your regular set of books, filing your annual tax returns as a separate tax return for your corporation, as well as any sort of GST, PST sales tax reporting. There are certain tax advantages to a corporation. The small business tax rate for corporations is 9% federally and then 2% BC. So your combined tax rate is actually 11%. Now there is a small business threshold. So any of your income, your annual income under $500,000 is at the lower rate, and once you pass that, it goes to a higher rate. Right? There are certain exclusions to that. If you have multiple corporations that are associated, if you have passive income, rental income, if you are, if you have investment income in there, there is a reduction of that amount. So certainly, I would strongly advise you talk to your tax accountant, talk to us about that situation and about your specific situation regarding your taxes. The other tax advantage of the corporation is the benefit of tax deferral. So you can leave money in your corporation and that will build up on a tax deferred basis, which you can use to invest or grow your business. But that money ends up being locked in your corporation. And that money is typically taken out of your corporation through salaries or dividends. One of the other advantages of a corporation is just the benefit of legal protection. So it is a separate legal entity. The assets of the corporation are at risk, not your personal assets in case your business is sued. But at the startup phase, there is a risk, although your corporation is a separate legal entity, it doesn't necessarily release you from liability. Most likely in practice, if someone sues your business for something, they will most likely sue your corporation, the owners personally, and any workers that were involved. Certainly, if you are obtaining lending as a small business or as a startup, the lender may require you to sign a personal guarantee, meaning you personally are responsible for the debts of the corporation. So just keep that in mind. And finally, moving on to the business plan.
Apologies there, Matt.
Yeah, no problem. So on to the mistake number 2, having a good business plan. And why should I do one? So one, if you require financing and if you require lending, chances are they're going to ask for a business plan. And I would argue, even if you don't require financing, it would be good to develop a business plan for yourself because it helps give you clarity on whether your business is viable. It challenges you to look at a few aspects of your business. Is your idea viable? It forces you to look into the viability of your business, right? So asks you to look at your competition, whether you actually have a customer base. Will they actually buy what you are selling? And it also addresses whether the market is actually big enough for you to actually grab a piece of the pie. A business plan will challenge your pricing and ask you to look at actually whether your product or service is positioned competitively or advantageously. So it will force you to look at what your customers or your competitors are charging. Perhaps is your price competitive? Are you priced too high or too low maybe? And where are you going to compete for product? Are you going to win on price or quality? And I think finally, a business plan, it does challenge you to focus on sales instead of the perfection of product, right? Ultimately, I think if someone is willing to pay you for it, you have a business. If someone's not willing to pay you for it, I would call it a hobby, right? And you kind of need to reconsider or kind of pivot your idea, right? Or look at something else. So having a business plan, I think, is a great idea for both businesses that require financing and perhaps are just looking at viability. So what are the elements of a good business plan? Well, it should answer all the high-level questions of a business plan. The point is not to have, write a bunch of words on a page. You're not handing in an essay for a homework assignment, right? But to plan appropriately for starting and developing a business. And it should answer, a couple of questions. What needs have you identified in the market, and how will your business meet those needs? Have you done any research on to validate the extent of the need? And what are the customer profiles? Where would you operate? Would you operate online, brick and mortar? And how will you market and attract those customers? What sort of equipment or perhaps facilities, fixtures, right? People will you need to service and service those customers? And what are the expected financial needs and perhaps the forecasted results? And finally, what are the risks to the business? And it should be written in concise and in plain English. So, to help you make it a bit more concise, it should contain charts, illustrations, graphs, if possible. You certainly should be realistic in your assumptions about future income and expenses. And if you have any detailed information, appendices always help. And so a business plan should contain the following. It should have a cover page with your company name, telephone, website, email, key contacts. It should have your table of contents. It should have an executive summary, which is a 1 or 2 page summary of the major points of the plan. And it should contain your overall goals and objectives, which is ultimately, what are you trying to achieve? How much financing do you need? And what are your use of funds? And the last page would be another page would be your management. What is the team that you have put together in place, both in terms of who are part of your organization full-time and who are your team of advisors? It should also contain a marketing strategy, which outlines your research, your strategy for attracting customers, and your pricing. It should also contain your financial projections. So what are your startup costs? How much money will you need at the beginning? How much you expect to bring in the next couple of years? And if you are looking to borrow money, what is the loan payment plan? Similar to your management team, you should also have your list of advisors, especially as a startup. You may not have a big team. So who is your bench helping you out? Your lawyer, your accountant, your financial planner, your marketing person. And finally, I think you need to have the anchor to a good business plan, your conclusion. So summarizing your goals, your objectives, your financing, and certainly the use of funds, right? So, if you are pitching the business plan to an investor or to lenders, right, they're probably gonna look at your summary, they'll probably quickly flip through, and they'll go to your conclusion, and then if it looks good, they may flip through the rest of it. So certainly the front and the end will be big key points of attraction. And finally, your appendices. So if you have any detailed information, your resumes, product illustrations, very detailed financial statements, this would be a great place to put your any detailed information. Okay, so we're just gonna skip over this one. Okay, perfect. Okay, and finally, the third mistake is just around understanding cash flow in financing. So, putting pen to paper on your business idea. So understanding your initial startup costs. So what are your assets? So how much will you, typically when you're starting a business, you may incur upfront costs to get the business operational. So purchasing things such as equipment, building a website, licensing, marketing and branding design, product development, permits, right? So understanding your upfront costs to start your business. You may have fixturing such as shelving, purchasing tables, cash registers if you're a brick and mortar. And if you are looking at a partnership or incorporating, there are the upfront legal costs to do so, to incorporate or perhaps draft a shareholder or partnership agreement. Also consider what are your recurring costs to run your business. So if you are if you're planning to open a brick and mortar store, what is the office store rent that's required? What are the salaries that you project that you are required to staff up the store, right? If you are a professional service working from home, you may have more and more people are spending money on software, right? So what is the cost to run your accounting software, your email, your website, right? So consider all those, right? And finally, one recurring cost is that you need to factor in is your personal finances. How will you pay yourself and how much will you need to pay yourself on a monthly basis to live, since your business in the startup phase won't be generating profits for a while. Now that we can project how much money we need, where will we get that money? Where there's a variety of places for cash flow and financing. You can look at different sources. There's certainly equity, which be the owners putting in their own money, or you're able to bring in investors to fund your business. You may be looking at debt or bank loans. So as I mentioned before, a bank will typically require a business plan. It may ask for a personal guarantee from yourself because there's risks that your new business may not return and pay back the loan. Other options may be looking at your personal lines of credits. So if you have a line of credit or a personal credit card, you can use that to finance your business. Certainly, a line of credit is cheaper than a credit card, right? So where possible, we advise to use that, right? But yeah, both you can use that to finance your business at the startup phase. There are also grants out there. So one big grant for companies who are in the R&D phase. So you can apply for a scientific research and experimental development grant. This grant is run by it's a federal tax incentive program run by the CRA, and it can give you.
Apologies. It's not what I want to do. Sorry about that again, Matt.
No problem. Okay. Yes, so the grant, it allows you to claim some tax credits for any of your expenditures, typically related to wages, materials, machinery, equipment, and possibly some overhead. It's a great program, especially if you are in the sort of, R&D innovation economy. And there are other grants out there. We see lots of other grants related to expansion grants, hiring grants, training grants are out there. Again, we do recommend it. It'd be very helpful to have an advisor on your team who specializes in this area and can help you look into grants. Crowdfunding is increasingly popular, where you don't have to give up equity. You may not be looking at a personal guarantee for a loan for any sort of if you are looking to crowd fund any ideas and products, right? And certainly, last source would be raising money from your friends and family. We generally do caveat it because It is risky because, you know, you're mixing personal and business. In the event that you can't pay it back, it may put a strain on the sort of personal relationships you have. But certainly, friends and family would be a way to raise money for your business. A tip: once you do find lenders or investors into your business, a tip for you on keeping your investors happy is just to keep them regularly informed of what's going on, and treating them with the respect of lenders and investors. Regular updates could also include copies of your annual financial statements, right? So they know how your business is doing, right? Whether it's, if you projected to have a loss for a couple of years, all right, here's our financials that says it, or we're tracking ahead or we're tracking behind, right? So certainly, I think that's just prudent. Now, finally, for cash flow financing, so for us as accountants and bookkeepers, we do stress the importance of, once you're underway, is to separate your business and your personal and your business accounts. Even I think for a sole proprietorship, we recommend it. Bookkeeping is much easier if you have one account, one credit card, even if it's your personal credit card, 100% for your business, because it doesn't create any questions of whether it's a business or personal expense. It doesn't mix things up. It just makes it nice and easy. Generally in our experience of doing the books for people, for our clients, it's more cost efficient if you have a nice, clean, separate set of books, right? It's where things are all mixed together, maybe on Excel spreadsheets, maybe not, maybe in a shoebox somewhere with a bunch of receipts. That's generally where the costs start adding up for your external accountants. And even if it's not your external accountants, you can imagine for your own time in order to assemble the books for filing your taxes. We do recommend, it's very cheap out there for using online products such as QuickBooks Online or Xero. It's very ubiquitous. There's a lot of bookkeepers who understand it. It's really designed for the small business user in mind, and they charge you a monthly cost to run it. And they keep adding more and more features, not just on the bookkeeping side, but also on like how to make payments efficiently, how to collect payments very efficiently. So we generally recommend it for all our clients. Now, another thing we do recommend is monitoring your cash flow. Cash flow early stage, and I think throughout all businesses, will always be a concern. Cash is king, right? Ultimately. And I think the key is having good accounting records. That will help. So making sure that you are invoicing and billing efficiently, right? So making sure, as soon as you're done the job, right? As soon as you're done your service, or as soon as you ship the product, that we're invoicing as soon as possible and we're getting paid as soon as possible. Simple tips, just as simple as, emailing the invoice. Forget mailing the invoice, right? Emailing the invoice, allowing multiple payments, accepting e-transfers, credit card payments, right? Just so that you can make that process as efficient as possible. We do also recommend, if you are doing a lot of business to business sales, if you're using a product like QuickBooks Online or Xero, just getting the regular habit of running your accounts receivable aging, learning on how to do that, because that will tell you how much you have outstanding, what customers' accounts haven't paid you, and just getting that regular habit of following up and sending reminders and collecting payment for that, especially I would argue in this sort of a tightening economy here. Staying on top of your receivables is key right now. And finally, good prudent cash flow management is just not running your business too tight. Do you have enough cash reserves to get through the lean months, right? So if you're incorporated, not leaving enough money in the business so that you can operate for the next 6 months, so you're not constantly taking money out and putting money back in. So having enough cash reserves, and also just ensuring that you have enough liquidity in the business. So if you have any lines of credits in place, in the event there are leaner months, in the event you have some seasonality in your business, you can go back and draw on the line of credits that you have personally. Awesome. So I'm going to hand it off to Chad now.
Great. Thank you so much for that, Matt. We'll jump right into mistake number 4, which is staffing. It's impossible to do everything. It takes a village to support the growth of a person, but it also takes a village to support the growth of a business. So look around in your business, look within yourself to look at, what you do best, and looking in-house for expertise for sales, marketing, administration, technology, software, finance, payroll, bookkeeping, tracking of all the money, and importance of finding experienced mentors. I was just listening to a podcast from TechCrunch, and it was just talking about core competencies. And what we see for businesses is you have a certain talent, and you really believe that people you can fill the need, and people will purchase your talent, whether that is making a product or providing a service. And that is the thing that gives you energy. You may not have the energy or the time to do bookkeeping, or maybe to do some marketing, or understand how to set up your technology. Those can, if you did try it and it zapped your energy, that's where you're not getting the most fulfillment, and you can feel that too. That's definitely a time for looking elsewhere. Outsource those tasks or those functions where it really zaps your energy, and zaps your energy that takes away from your the main thing that makes you thrive, the thing that is the talent that people will come back to you to purchase your product and service. I do want to mention that there is an importance of finding experienced mentors. Getting experience yourself is very time consuming. It can be very costly if you're starting your business by yourself. Mentors have gone through those booms and busts and those challenges. So it's much more efficient to find somebody who's already had gone through that. Mentors are hard to find. It's certainly not easy, but definitely do make it as part of your process to go out to network, to talk to different people, to find that match of the mentor, especially somebody who's already doing the same kind of business or has done the same kind of business as you have. So build those relationships, continue to show them how you're different, and to bring them onto your team. Taxes, the last mistake. Taxes, yes, as you all know, we live in a great country, and we have to pay for all the great services that this country provides for us. There are 2 main types of taxes: income tax and the sales tax, which is HST, GST. Income tax is a tax on your profits of the business, and differs depending on the type of the business. I won't get too much into that, because if you're just selling a product and service, you have a certain tax on this. But if you were to run a corporation with real estate, which is rental properties, for instance, that actually does fall into a different type of tax. So I won't get too much into that, but just do be aware of that. For sales taxes and GST, yeah, that's the challenge. Whether or not some businesses should, I do see this quite often. Should they register for a GST account? The number that you should think about is $30,000, or if you even expect that you're going to make $30,000 within your next 12 months in your next year, do register for a GST account. Even if you don't, there are benefits of registering for a GST account. Whatever supplies that you purchase in, and if you pay GST on it, they become a credit towards the GST that you charge towards your customers. So there are benefits of registering for a GST account. If you're close to $30,000, I would say register. And I find that really validates you as a business when you register for a GST account. Now, one of the biggest questions that people have is, what is tax deductible? There's no specific wording in the Income Tax Act that says, what is exactly tax deductible. It's basically any reasonable current expenses that you paid or will have to pay to earn business income. The common ones that you see are advertising, business fees, licenses, dues, subscription, legal, accounting, payroll, meals and entertainment, travel. Those are very common ones. And if you have any questions as to whether or not it's deductible, definitely speak to a chartered professional accountant. And how losses work. How losses for sole proprietors, as Matt had mentioned, losses can offset other parts of an income for a business. For corporations, losses are locked in a separate entity and can't offset your personal income. So there are differences between the structures and how losses are used. Business losses, for instance, is in a corporation. It can be carried forward and applied against future profits for 20 years. And it can be carried back for up to 3 years if you pay tax in the prior 3 years. Tax returns for sole proprietors, partnerships, and corporations. Sole proprietorships, you will be filing a T1 tax form. For corporations, you will be filing a T2. And partnerships could be T1, T2, or T3s. As you recall, Matt had mentioned that partnerships flow out their income respectively to the partners in doing the similar type of business. And it is for those entities to then report their taxes in their own separate entities. How long should you keep receipts for tax? CRA requires you to keep all business records and supporting documents for 6 years. And it's similar too for PST. We have a guide where we've identified how long you should keep records for, but that's the magic number for 6 years. Keep it for 7. Anything after seven, then you can decide what you want to do with that. Note that the 6-year period starts at the end of the tax year to which the records relate. Records and supporting documents concerning long-term purchases and disposal of property, vehicles, for instance, a building, for instance, if you're leasing it or even if you're purchasing it. Corporate share registry is very, very important. The major documents for the business, retain those forever for the life of your business. Those are even including the formation documents, your articles of incorporation if you started a corporation, your shareholders agreement, your partnership agreements. Those are what I call and what we call the entity documents. You should retain those forever. What CRA looks for in an audit, basically the original receipts to back up all the expenses. It's very important, and we say it all the time, is to keep all your records. There's a lot of technology that we use in our business as well as in our clients' businesses to be able to help them collect all those documents and store those documents. And one of the ones that we found a lot of success with is called Dex Prepare. That's for all your purchases. It can retain documents up to 10 years, and you pay a nominal fee, a monthly fee, to be able to use it. So documents are very important. You may not, CRA may come asking 3 years from now to ask you about travel expenses. And not being able to provide those documents may mean that they can deny those possible deductions and assess you taxes for something that happened 3 years ago. So we've seen a couple of cases of that, and then so we're not so much of just harping on, good administration, but it does have a severe penalty with it, is the reason why we feel that it's very important to be organized and to have a strong method of retaining records. So I just want to quickly summarize that piece of having separate bank accounts, personal and business bank accounts, very, very important. If you have different currencies, and you'll naturally will have separate bank accounts, it's a good idea to have those. It reduces your costs actually to have separate bank accounts, as Matt has mentioned before. Having separate credit cards, if you're doing personal purchases and business purchases, definitely have separate credit cards. And credit cards don't have to be expensive. There's a lot of free credit cards that are available, that are out there. And even some that provide some nominal rewards, like 1% cash back or something. Those can also be free as well. Stay current with your taxes. There are penalties for late filing, penalties for non-filing. So definitely, it's very important to stay current. The penalties can add up because they have, if you're owed taxes and you haven't filed, they are actually interest on the balance outstanding on a monthly basis. And recently, CRA has upped their prescribed interest rates. It is up to 6% now on outstanding balances, and they just accrue and they just compound over and over and over. So do definitely stay current on top of your taxes. Use bookkeeping software. Bookkeeping software is very inexpensive. They can be as low as free to accounts that are $20 and even $50 for more larger complex organizations, maybe doing more inventory or something. The price can go up a little bit more from there too, but it is a major time saver, especially if you can email your invoices to your clients and they have a payment feature right there. They can click on it on their phones, pull out their credit cards, make you a payment, and it's done. You never have to run to the bank to deposit a check. Your booking software is happy because it can record that income and the receipt of the payment all in one go. So absolutely, I don't think that there's any reason that people should still be using Excel. You can as you start out, as you start to develop your financials, but do check out bookkeeping software. And lastly is to have a very strong records management of being able to keep all your receipts. There's also software that's out there like the Dex Prepare I mentioned, or even having a Google Drive thing where you copy or take photos of all your receipts and dropping it onto a free Google account. That's always a great option as well. We had been asked one question when I was developing this webinar with Annetta and also Kathy, of some people wanted to understand what's the difference between bookkeepers and accountants. Bookkeepers, we generally find the bookkeepers out there in the wild, they are entering transactions. Some may be certified, some may not. And some will file taxes, but we're uncertain where they may have received training. Some bookkeepers actually go to CPA BC or CPA Canada for tax training, which is awesome. Accountants, the difference with accountants, and I'm speaking of chartered professional accountants, in order for accountants to provide bookkeeping and tax filing and other services, they are required to be certified, insured, and licensed in order to practice. Chartered professional accountants have to go through regular professional development on an annual basis, and so do certified bookkeepers. If they are with the Certified Professional Bookkeepers Association of Canada, but for chartered professional accountants, they would also go through that rigorous annual professional development. And lastly, chartered professional accountants have to abide by the Code of Professional Conduct. And if they have any issues, the public can report them to a body like the BC CPA. And face disciplinary hearing. So quickly to summarize, what we learned today are the three main types of a business structure: the importance of a business plan and what you should have in it, cash flow, financing issues and concerns, income taxes, sales taxes, and lastly, some of the tools and resources like staffing and some of the areas of record keeping and accounting software. Some tools and resources, I won't get too much into them. We'll be able to have a copy of our presentation where you'll be able to have these the links for these tools and resources. We also have a little bit of a Purpose CPA, and in respect to time, I want to open it up for some questions and answers. Thank you so much for having us here today. And please, if you have any questions.
Hi, Chad and Matthew. Thank you very much for such a great presentation. I've been monitoring the chat as we've been going along. So there were a few questions that were asked, and feel free, anybody else, to raise your hand. But I think we'll start with Lisa's question. She wanted to know the approximate cost to hire a CPA for a small business.
Yeah, it's anywhere, could be a few $100s for a consultation in terms of just a quick assessment of their business. We have an assessment fee for their accounting system. $200 is what we start out with, and we'll go through their accounting system to evaluate it and give them a report, where we also would follow up with a 30-minute call to give them an idea of, what they need to work on and how they can improve their accounting. Yeah, it doesn't have to be expensive. For our year-end taxes, for instance, for T2s, generally you'll find T2s in that $1,000 mark at the end of the year to prepare it. For personal taxes, it could be, if you have just your T4s, there's inexpensive software like Simple Tax and as well as TurboTax from Intuit that could run you about $100 or $200 for a full service feature. Could be about for a CPA to do it, you get that more personable experience and a more definite view into your personal situation by going with a CPA. For personal taxes, would generally around a couple $100 for like 2 adults and also with 2 dependent children. Hopefully that'll give you a bit of an idea.
Yeah, that's great. And I want to encourage everybody to use this contact information that's on the screen right now, or to contact us at WeBC, because we could also get the questions to Chad and Matthew. We're getting a little bit low in time. So there was another great question from Mary Rose Murphy, and she wanted to know a question that we get quite a bit at WeBC. She wants to start a partnership with 2 others, and she wants to incorporate. Who does she talk to first? Like, does she talk to an accountant first? Does she talk to a lawyer first? Or does she talk to one of our business advisors, for example? Would you guys, either of you, have any insight on that? And actually, I'm going to start sharing my screen because we're getting to the end. But go ahead, each of you, any of you can go ahead and jump in.
Chad, I'll let you jump on that.
Yeah, that's a good question. Generally, the lawyers are the ones that are creating that structure. It may be just fine for you to have one corporation where you run the business and you share the profits within that one corporation. If you have a partnership and you incorporate, the more structures that you have, the more administrative processes that you have to go through at year end. So if you're still validating your business and trying to get a better understanding about it, maybe it's a good idea. You can run it as a sole proprietorship and test it out. I really do believe in trying to find the quickest and most simplest way to run a business. If it's a pop-up business, fantastic. Go out, test your business idea, your product in a very small setting, which you can do really quickly at a farmer's market or a small space that you can rent out for maybe a couple hours. Use that, and you can run that in a sole proprietorship setting without having to get into a partnership. So once, if it does gain a lot of steam and you're starting to see that growth is getting a lot more, then certainly speak with your accountant. Lawyers are generally the ones who will help you set up that structure and decide on how that's going to go. So take a bit a step at a time. If you get into something much more larger, you have to expect a lot more cost as well as administration that goes with the larger structure.
Yeah, that's a great answer, Chad. I always tell women as well, the reason we can't at WBC suggest professionals to you is because it's really a very personal thing, and they want to ask you a lot of personal questions about your finances and everything else to determine what you need next. So that's where a CPA accountant, that's really great.
Yeah.
Okay, we're getting to be out of time, so I just wanted to share that Shannon thought that the keeping the separate accounts, she is a bookkeeper, and she thought that was great advice. So great for you guys. And Sue actually wanted to know whether scanned documents were sufficient for CRA, or did they need hard copies, original copies? Just a quick answer to that.
Yeah, digital copies are fine.
Okay, well, that's super. Okay. So I really want to thank Chad today and Matthew today from Purpose CPA, and for joining us and explaining a lot of the things in order for you not to fall into these 5 mistakes as business owners. And like I say, you will be receiving the slides or a handout after this session. And again, reach out to us at WBC or to Chad or Matthew directly. You've got their contact information. So I just wanted to highlight a couple of upcoming events. We've got a webinar series on marketing. And as Chad and Matthew suggested, with the economy the way it is, knowing who your customers are, knowing how to market to them is so important. So we did the first session day before yesterday, but there's 2 more. So we hope you sign up for that. We've also got a webinar series on bidding on government contracts. Again, as a small business, if you can get one big government contract, sometimes that can tide you over in the lean times. And on December 13th, we're doing a beginner's guide to importing raw materials in your business, which is so interesting as Canada on the West Coast, importing so crucial for a lot of people in business. Okay, thank you very much for joining us, everybody. And before you go, we'd like to just launch a little poll. And remember, I asked at the beginning if anyone has any suggestions for webinars, seminars, anything like that. We would love to hear it. If you could just take 1 minute to do our poll. And again, thank you very much to CPA Canada and CPA BC for being our sponsor today. Thank you very much, Chad and Matthew. It was wonderful. And I'm sure you'll get a lot of great questions from the people in the webinar today. So yeah, we'll just wait another minute for the poll, but anybody else that's on the call, the webinar today, and you have to go, thank you so much for joining us today. Please visit our website. WBC is here to support you in business, as well as these 2 gentlemen.
Thank you, everybody, for your time. And thank you so much for moderating.